In the ever-evolving world of stocks, fortunes are made and fortunes are lost. Today, we dive into the current state of the stock market. The stock market is a roller coaster ride, a thrilling journey of highs and lows, twists and turns. It's a dynamic ecosystem that reacts to global events, economic indicators, and corporate performances. Recently, we've seen a whirlwind of activity, with the market showing remarkable resilience amidst a slew of challenges. The overall performance of the market has been a mixed bag. On one hand, we've seen record-breaking highs, driven by a buoyant economy and strong corporate earnings. On the other hand, we've witnessed periods of volatility, fueled by economic uncertainties and geopolitical tensions. But this is the nature of the beast. The stock market is not for the faint of heart. It requires patience, a keen eye, and an understanding of market dynamics. Now, if we zoom in a bit, let's talk about the tech sector. It's been a wild ride, to say the least. The tech-heavy Nasdaq has been on a tear, driven by robust performances from heavyweight champions like Apple, Amazon, and Google. But it hasn't been all smooth sailing. There have been bouts of volatility, triggered by concerns over inflation and rising interest rates. Nonetheless, the tech sector remains an exciting space, a hotbed of innovation and growth. However, it's important to remember that the stock market is not a one-size-fits-all scenario. Different sectors react differently to market conditions. While tech might be soaring, other sectors might be struggling. That's why it's crucial to have a diversified portfolio to spread out the risk and capitalize on various growth opportunities. So where does this leave us? Well, the stock market is a complex beast, full of opportunities and pitfalls. It's a game of strategy where the astute investor can reap handsome rewards. But remember, it's not a sprint, it's a marathon. The key is to stay informed, stay patient, and stay resilient. Now that we've set the stage, let's delve into some specific stocks, starting with Alibaba. Alibaba, a titan in the e-commerce world. Today, we explore its recent performance. Alibaba, often referred to as the Amazon of the East, is a dominating force in the e-commerce sector. It's a behemoth that has extended its reach far beyond online retail, delving into areas like cloud computing, digital media, and even entertainment. But how is this Eastern giant faring in the stock market? Alibaba's stock price has seen a roller coaster of highs and lows. With each peak and valley, investors have been kept on their toes, watching the market with bated breath. Despite the turbulence, Alibaba's stock has demonstrated resilience, fighting its way through the fluctuating market trends. In recent news, Alibaba has been making headlines. From expanding its cloud computing capabilities to unveiling new technologies, Alibaba continues to innovate and grow. But it hasn't all been smooth sailing. The company has faced regulatory hurdles in its home country, China, which has caused some ripples in the stock price. While these challenges may seem daunting, it's important to remember that Alibaba has a track record of navigating through regulatory waters. From a broader perspective, Alibaba operates in a thriving market. The e-commerce industry has seen a surge in growth, particularly in the wake of the global pandemic. As people turned to online shopping, Alibaba was there to meet the demand. This trend doesn't seem to be slowing down anytime soon, with more and more consumers embracing the convenience of digital commerce. In the grand scheme of things, Alibaba has shown that it can weather the storm. It's more than just a titan in the e-commerce world. It's a dynamic, adaptable company that continues to evolve and innovate. As we delve deeper into the stock market, it's important to take note of these industry giants. They set the pace and often indicate broader market trends. Alibaba undoubtedly remains a key player in the e-commerce industry. Now, we shift our attention to the magical world of Disney. Disney, a name synonymous with childhood memories and magical experiences. But how magical has its stock performance been? Picture this. A company that started with a mouse has grown into a global entertainment conglomerate, spanning film, television, theme parks, and even streaming services. But let's talk numbers. How does Disney's stock stack up in the world of Wall Street? Currently, Disney is trading at a price that can make many investors' eyes twinkle with anticipation. It's a price that reflects the enduring appeal of this entertainment titan, and the confidence of investors in its ability to keep the magic alive, even in challenging times. But the stock market is not a fairy tale. It's a place of hard facts and numbers. So what's been happening in the House of Mouse lately? Well, there are a few headlines worth noting. First off, we have Disney's foray into the streaming wars with Disney+. This move has seen the company go head-to-head with streaming giants like Netflix and Amazon Prime. The results? Quite impressive, with a subscriber count that's growing faster than a beanstalk in a fairy tale. Then there's the reopening of Disney's theme parks, a significant revenue source that took a hit during the global health crisis. The parks are back in business now, and the cash registers are ringing once more, bringing a sigh of relief to investors and Mickey Mouse alike. However, it's not all pixie dust and magic carpets. Disney has faced its share of challenges, from production delays due to the pandemic to navigating the changing landscape of entertainment consumption. But as they say, every good story has its twists and turns. In the broader market context, Disney remains a formidable player. Its diverse portfolio, ranging from blockbuster movies to merchandise, provides a robust buffer against market volatility. And with its strategic moves in the digital space, Disney is showing it's more than ready to adapt and evolve. So, is investing in Disney a happily ever after scenario? That's a question only time can answer. But one thing's for certain: Disney continues to enchant investors with its diverse portfolio. Moving on, let's take a look at PayPal. PayPal, the leader in digital wallets. How does its stock stand in today's market? Let's dive right into it, shall we? Now, PayPal, as we all know, is not just a household name but a global pioneer when it comes to digital wallets. It has been at the forefront of the digital payments revolution, and this leadership position is reflected in its stock performance. At present, the price of PayPal stock is trending in the market. It's been an interesting ride, with the stock showing resilience in the face of market volatility. And it's not just the price that's been making headlines. There have been some noteworthy developments within the company that are influencing the market's perception of PayPal. Recently, PayPal announced its expansion into the Asian market, a move that has been lauded by industry experts. This strategic decision is expected to open up new revenue streams for the company and has already started to reflect positively on the stock price. Moreover, PayPal's commitment to innovation is also playing a key role in its stock performance. The company's continuous investment in technology and user experience is setting it apart from competition. This commitment to staying ahead of the curve is not just winning the trust of users, but also that of investors. Now let's take a step back and look at the overall market of PayPal. The digital payments industry is booming, with more and more consumers shifting towards cashless transactions. This trend is expected to continue, given the convenience and security offered by digital wallets. As a leader in this space, PayPal is well positioned to capitalize on this growth. However, it's important to note that the market is not without challenges. Fierce competition and regulatory hurdles are factors that PayPal needs to navigate. But with its robust business model and innovative spirit, PayPal is poised to maintain its strong position in the market. In conclusion, while the road may not always be smooth, PayPal's stock is worth keeping an eye on. Its strong market position, strategic initiatives, and commitment to innovation make it a compelling player in the digital payment industry. PayPal's dominance in the digital payment space is unquestionable. Lastly, let's examine the electrifying Tesla. Tesla, the electric vehicle pioneer. Let's review its stock performance. Tesla, the brainchild of the visionary Elon Musk, continues to drive the electric vehicle market with its high-performance cars and cutting-edge technology. The Tesla stock, trading under the ticker TSLA, has been a hot topic for investors and analysts globally. Known for their volatile nature, Tesla stocks have seen some dramatic highs and lows over the years. But let's talk about the present. Currently, Tesla stock is trading at a significant price, reflecting the market's faith in its ambitious plans and the future of electric mobility. However, the stock market isn't just about numbers, it's about stories, and Tesla has had its fair share recently. From production delays to the unveiling of new innovative products, every news piece related to Tesla creates ripples in the stock market. One such recent news that caught the market's attention was the announcement of Tesla opening a new manufacturing plant in Texas. This news has sparked a fresh wave of excitement among investors, reflecting positively on the stock price. Then there's the overall Tesla market to consider. Tesla isn't just an automaker anymore, it's a technology company, a clean energy company, and a self-driving car company, all rolled into one. This diverse portfolio has given Tesla a broad market to operate in, and a diverse revenue stream that insulates it against sector-specific downturns. This diversification has been a significant factor in Tesla's stock performance. It's not just about selling cars anymore. It's about selling a vision of the future. A future where cars are electric, energy is clean, and driving is autonomous. However, like with any stock, potential investors should be aware of the risks. Tesla's future, and by extension its stock, is subject to regulatory changes, production capabilities, and the overall health of the global economy. Tesla's revolutionary approach continues to impact its stock performance. That concludes our stock analysis for today.